Hi, welcome to the market alert for Monday, the 1st of December 2014. Just going back to Friday's trading session. First off, half-day trading because of the Thanksgiving holidays. We can see that the market started to move higher from the off there, above 17,830. We had a buy signal, which the market moved higher and traded up to the scalp there. This then became a resistance area. As you can see, the market moving across here to the sell signal at 1650. What's really unfortunate about this is just an hour before the close, because the Dow closed at 6 p.m. GMT on Friday. So this down move, unfortunately, which was as a result of crude oil moving sharply lower. That's what they're stating. We'll look at that in just a moment. Was a really good down move, but unfortunately, I say the market was only open for another hour before it ceased trading for the Thanksgiving holidays. So if we just have a quick look at crude oil, and the reason I'm mentioning this is that crude oil is, just enlarge that for so you can see it. Crude oil plays a fundamental part, or the price of crude oil, in the Dow, because obviously if there's a fall off in crude oil prices, it's showing there's no demand, the economy is going to halt, and then in theory, not necessarily in practice, then you should expect to see the Dow move lower. Now this depends upon the phase the market's in and what's also happening in the background, and in this case, of course, we've seen an increase in crude oil prices during the last few years, as we have with QE. This has moved the Dow higher. It's given this perception that the economy is fine. But as we've seen of late, from the beginning of November, crude oil prices have dropped sharply. And Friday was no exception, when we saw prices moving to the downside, and we're now at 68.43. This is the Brent crude as well. So a sharp drop off from $84, $85 a barrel, all the way down to 68, and this is only from the beginning of November. It's actually bigger than this as far as this drop is concerned. So again, you've got this weakness in the background, so I wouldn't be at all surprised if we don't see a bit more weakness, which is what we're seeing this morning. We've got this market opening following through on the crude oil message of Friday last, and then the market finding a bit of support and then trading sideways. But there's some weakness in the background, which we can see in the daily chart. You've got the all-time high, which we had the week before last at 17,892, and you can see there's some weakness around here at the moment. To add to this, we've also got the implied volatility, 10.86. We've got a crossover of the historical volatility as well, which was down at 901. So we are set up, in theory, for a correction in this market. The only thing that's not going to create the correction is perhaps a run up to 18,000 first, the psychological level, and any good news that comes out of the market. Speaking of which, let's just have a quick look at economic news for today. We've got manufacturing PMI, but that's from the UK, but we've also got the ISM manufacturing US at 3 p.m. This is forecast to come out lower as well again, so if it comes out, the actual figure comes out lower than the forecast, then we could expect to see a bit more weakness in this market. And we've certainly got that sideways market there, where we could see some potential weakness coming into this market, and again backed up by the implied volatility there. So today is really going to be a day to sort out where the market's going, having had Wednesday, Thursday and Friday of last week with light trading. The market needs to sort itself out during today, and then hopefully back to normal from tomorrow. So it will be interesting to see how things pan out today. During the break last week, I have managed to record, edit and produce and upload the test spar videos. These are available in the additional trading videos section. you will find a number of videos here, part 1 all the way through to part 9, I think it is, if I recall. Yep, all the way through to part 9. There is one more video to come, which is using test bars in different trading time frames, which is yet to be recorded, but there's more than enough to be getting on with there in the meantime. And then I'm going to move on to Fibonacci's as well, and how you can use those to predict where the market is likely to stop in a retracement situation as well, in conjunction with the test bars and also the psychological levels as well, which will allow you to actually find more trades than you can actually poke a stick at as well. So that's really it this morning. It's just a catch-up market alert this morning, just to bring you up to speed of where everything is and what's been happening over the last 3 days when the market really hasn't been active, but what's been in the background causing any potential weakness to come into this market. Right, that's it from me this morning. I will see you in tomorrow's edition of the Market Alert. As ever, thank you for your support. It's very much appreciated. Enjoy the videos. If you have any questions, then please do let me know. Right, that's it. See you in the next one.